Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, June 4th, 2020. It is 11:15 a.m. Eastern Time as I'm starting the video. I want to just highlight a few of the things that I'm keeping an eye on today watching. First off, as usual, I like to start out with the broad market quick update. We've had some pretty clean wedges forming. These are those minor downtrend lines that were recently highlighted. You still need to see the Qs take out. There's quite a bit of support levels below nearby, but 227.80. This uptrend line as well. That should trigger a more substantial drop to those targets that were previously mentioned there. But right now I'm watching these uptrend lines. We have these little wedges right here forming on the 60-minute charts of QQQ and SPY. We've seen an impulsive intraday reversal, but it's pretty much brought us down to those levels. And as I like to say, it bears repeating, support is support until unless taken out. So these are levels we'll watch. I want to get to commodities and silver and gold, talk on that. Seeing some movement in the currencies right now since my last update, so I wanted to get to that. But before we leave here, there's QQQ, there's the levels to watch. And just to be clear, the way it should work, break of that small wedge should bring us down here to this uptrend line and/or that 227.80 level. And if and when that goes, and again, these big divergences tell me that's still the most likely scenario. I know it seems like the market will never correct again. Ever. I know that's the feeling I think some people get, but it will sooner or later, and it's just a matter of how much. We have some big divergences that it could surprise most. It's usually you don't see it going from such a strong, relentless bid to a big drop, and I don't see anything in the charts right now that indicate anything waterfall selling. In fact, there's some things that indicate the broad market may want to run at the old highs. I'm going to get to that in a second. I'm looking at gold and treasuries namely. But before we leave there, again, that's what I'm watching. I don't think the risk reward is attractive to the upside. There's another gap now to be filled. For about the last 2 weeks now, I've been looking for a backfill of these two gaps from a couple of weeks ago. I still think we'll get those. Now we have a smaller gap right here. So here's the levels to watch on SPY. This is probably the most important level. This is comparable to that trend line I just showed you on QQQ. In other words, this is a 60-minute chart, and you have these rising wedges right there. So there it is. You still very much have the divergences intact. They've been building. You can draw divergence lines here, make a small wedge, or you can draw the larger divergences, and those should show through on the daily chart. So we're getting a nice, some pretty hard fade intraday right now. But again, the market's been volatile. It spikes down, spikes up. We're back to where we started back here a few days ago. That was last Wednesday, or this Wednesday, I'm sorry. Yesterday, I just jumped down to a 1-minute chart to show you that move there in the futures. Not the futures, the indexes, sorry. We're well into the trading day right now, so I'm kind of keeping an eye on that. Although here, let's look at the futures. Before I do that, I'm going to just show you IWM, since we are, trading the small caps right now, or at least I am, and I think a couple of you on the site are as well. Remember the bigger picture on the small caps, and I'm gonna move this line right now. Well, we'll leave it there. There was a trend line there; it was valid, but I'm gonna add another trend line right now that's similar to the one you have on QQQ and SPY. So there it is. I see fairly clean wedges. There's enough reactions now to make that a valid trend line, and so this is what we're watching for right now, and that's why I'm doing this video. These trend lines I did not point out this morning. So those are the levels to watch. Remember on IWM small caps, I showed you a chart of the small cap futures this morning, has the same level. It's a different numerical value, of course, than the ETF, but that was a Russell 2000 futures. This is the Russell 2000 tracking ETF, big level in my opinion. And the fact that we had a bearish engulfing, we took that, ran back up to the top of that level. It's not great, but most importantly, as I said yesterday, is that, as I like to say, resistance is resistance until unless taken out. And as far as resistance levels go, this is a pretty big one here. So we'll watch it, and I'm going to give you one more trend line there. This would mesh with the one I just drew. We had that smaller uptrend line on the 60-minute chart that was taken out. Now we have this one right here. Now, of course, we're looking at a daily chart. Let's take a quick look at the futures, and we'll move on to some of the other things that are moving. Because again, the markets are only one one trading vehicle. There's a lot of other stuff out there. I'm not going to do an all-inclusive video this time around. I just want to look at treasury bonds, gold, precious metals, currencies, and a few commodities that are continuing to firm up. NQ, as of yesterday and this morning, said we need to take out this 96.49 level. We continued to diverge. So since this morning's is where we were this morning, I had the divergence lines right here. If I can grab it there, I'll move it. That's it. We just pushed a little higher, made a slightly a marginal new high, and an impulsive reversal back to that level. But still, we haven't taken it out. So once again, support is support until unless taken out. That's the level to watch. And it means, when you're on a 60-minute chart, you want to either see a very big red candle through there that looks like it has a little chance of snapping back before the 60-minute candle closes, or you want to wait and see a 60-minute close, and that should do the trick. And I think I said this morning that'd be a minimum pullback target right there, 94, about 94.95 right there. And then you can see some additional targets if we get some downside traction. But again, to reiterate, we don't have those sell signals yet. That's the euro. I'm going to get to the euro in a second. I wanted to cover ES. The same level I highlighted this morning. We had a little minor trend line break. I believe I covered that in last night's video. We were above it. I said a break of that trend line, I believe I did, would take us down to this uptrend line here, which it did. So, it's a quick little trade, not much. But again, this is the more important one. That's a very small trend line, not a lot of reactions. This one's a little bit bigger, more significant. And that will coincide, if and when that goes, it should coincide with a breakdown in SPY. And if whether you're trading SPY, ES, none of the above, maybe NQ, even RTY, the more these levels go, the better the chance that breakdown is going to stick. So in other words, you might have a little, what looks like a breakdown here on ES, but at the same time NQ or QQQ hits and then bounces and holds and bounces off support. And what happens then? You get a whipsaw signal. And we all know this, this trend has been resilient. We've had little corrections along the way, but those corrections get bought up. So we got to, be safe, give it the benefit of the doubt, and wait for a pretty solid breakdown there. But that's the level I'm watching on ES. RTY, small cap futures. Let's see, here it is. Same, not much to update since this morning. This was just the measured drop down to that first target from yesterday, about 6.5, or preferred target, I should say, 1355, near-term target. Breakdown back test still has a divergent high, and again, what stands out to be probably more than anything, and it's more significant. Anytime you go to a longer time frame, a weekly chart, support, resistance, trend lines, to me have more significance than those on a daily chart. The daily chart, those levels are more significant, and the developments than the 60-minute chart. And this is when we look at a 2-year chart of RTY, which the same thing we just did on IWM. You just see lots of reactions on and above that level, from above and below, numerous reactions. And that's it. So there's a story of IWM, small caps, rally back to resistance. They peaked back in 2018. So it's been a pretty rough bear market for them so far since that high. And these again are the futures, but that's about a 47% drop. Small caps got cut in half. Okay, let's talk currencies and then the dollar sensitive assets. This is E7 euro. We need to see a solid and convincing break of this trend line, and then again this one would help. We started to move through it real slow. ECB announced they're going to expand their bond buying program. We've had some back and forth, and the divergences continue to build, but we had a big, you can see the size of these last couple candles this morning, some big movement there, and that coincides with that that sharp drop in the index ETFs that I just showed you there. So you can see one of the biggest spikes in a while. Could end up being a blow off top, but whether it is or isn't, the most important thing is we don't have those sell signals. So I'm still considering an official short trade on silver, but we don't have the breakdowns yet. This isn't an uptrend. Divergences are not sell signals. They're an indication of a trend reversal. And so right now I have to move the divergence lines up. They're still intact. They look like this and this. So we'll see. If we get a big reversal here, then that has the potential to be a blow off top. I imagine there was some pretty good volume on that. Yeah, you can look at that that spike up. So after an extended uptrend, you see a big surge, a near vertical surge like that with a lot of volume. That is a potential buying climax, call that. So, and those result in significant tops. And keep in mind, we're talking a 60-minute chart here, and I've tried to make that clear that my near-term outlook isn't always the same, nor is it right now in the currencies with my longer-term outlook. All right, so we'll watch that. So again, just to clarify, no sell signals on the euro, which means no buy signal on the dollar. Dollar had a big spike down. Dollar last night went. It took out that minor trend line I had here, this one right here that's purple right now, and that was a catalyst for the run up to the larger, more significant trend line where we had a reaction on the initial tag, which is to be expected. Usually you're going to have at least one reaction, so we still need to take that out. And then I put this line here since last night. I think I had on the chart this morning 97, about 97.60 or so, a little minor price resistance that comes in. That's about where we failed this morning. So really that should do the trick. If you want to set a price alert on DX dollar futures, or you could even use UUP. If you don't trade futures, remember UUP is a dollar ETF. Now the levels are going to be different, but what you would do is go to a 60-minute chart, and then you'd look at this morning's spike high and set a price alert right above that right there, because that should do the trick. You can also probably draw a trend line, which should come in similar to that other trend line. Again, this 60-minute chart. So there it is. That's what you would want to see on UUP. Dollar breaks out. If it does and starts to rally, that would be a net bearish event for gold and silver and crude oil, which I'm going to get to here in just a second now. Let's do that. Let's roll over. Let's start with crude, because I think there's a really nice setup forming here in crude. That's 1 month. Let's see if I can go back a little farther. Let's see what my 2-month chart looks like. Yeah, same trend line right there. So that's it. I just want to show it comes off these reaction lows here. We spiked down. Remember that wonky? That's when specific contracts, they're not shown here on the continuous, but I think it was the May contracts went negative territory. But you can see I wanted to show you the uptrend line. Let me go back to that 30-minute chart here, and that shows it a little bit better. There it is. We need to crack this trend line. That would be a sell signal on crude. And crude moves, especially lately. The gains and price swings can be pretty lucrative to catch. Even if it's a small drop. So that's minor price support right there. But I'm really looking at the trend line. So let's say we break that. That's about almost a 5%. Yeah, about a 5% drop to that first target there, 34.76. And about a 15% drop if we get down to that 31 target, which I think is very doable. If things get really ugly with crude oil, I think we can come all the way back down here to that 27.75 level. So there's some potential targets. And there's many vehicles to trade crude oil. You can use USO. That's probably for ETNs at least, probably the safest bet. It's most liquid. It doesn't use leverage, and I don't have the chart marked up right now. I'd have to study that a little bit and give you levels. But of course, if it's not an active trade and I don't have the official trade, adjusted targets out there for it, you can use the charts of crude futures. Most brokers will give you free real-time futures charts, even if you don't have a futures account with them. And investing.com will give you free real-time charts on crude oil, crude futures, and other things like that. So that's one potential vehicle. And you can see, if you look at it this way, we're on a 60-minute time frame now. You can see negative divergences right there, pretty good divergences. And yeah, you can see some gaps to target and some other things. You can see a trend line right here. You could draw it like this. You'd have to play around with it somewhere along those lines. You get the gist of it. Pretty much the same, similar chart pattern as crude futures. And then you have other ones, DWT. Some of these broke recently. They just weren't tracking that well. With the volatility high right now, you might want to stay away from the 3-time leverage in certain instruments like crude oil and all that. So like I said, USO is one of them. OIL is another one. I guess they changed it to OILK, but I like USO a little better. And these are gold futures, symbol GC, and that's a pretty big level there, about 1698 or so. I mentioned that as its recent trading range going back to early April right here, and we hit it again. Another bounce off that level. Should the dollar break out, the euro break down, this would be the most likely scenario. But until then, just like I said a minute ago with the dollar and euro, support is support until unless broken. So that's it. Another hit of support today. We're bouncing off there. Can you make a case to go long? Sure. You can always make an objective case to go long at support with a stop not too far below, but based on the technical posture of the currencies, like I said, I'd be more apt to wait for a breakdown. And I've also made clear lately that of the two, I prefer short on silver. And here's silver. Silver has been dancing around SI silver futures. You put in this big divergent high here. We had a nice drop already, hit my first two price targets. Gave you in the last update this potential trend line here. We had a few reactions early on back here. You can see some distinct reactions on there. So I extended that trend line out. And depends on if and when we get there, but if we get there soon, you're going to have dual support levels. Now what that may do is if we get there around the same time and then take them out impulsively, that's all the better. Now the fact that we haven't tagged it in a while leans me towards a scenario where you get another check of it to help validate that trend line, get a little bounce. And it has the potential to even prove to be a whipsaw. If we broke down below 1773 soon and hit that and then reversed, so you got to be careful here. And again, that's why I do these videos, and that's why I harp on with the dollar still in a bearish trend, that's going to help support gold and silver prices somewhat. Not that we didn't get a decent correction so far. I already talked about that in itself is pretty bearish. That silver already had a pretty good drop, and so if the dollar breaks out and starts to rally, then that could even be the catalyst for a bigger drop down here, or at least to that next target at minimum 17,258. Okay, and the ag commodities continue to show, charts continue to firm up. Wheat's still in rally mode, starting to pick up a little momentum today. Nice move. It's up 2.66% now. Was up a little higher before, getting close to that first target there. Soybeans are also, solid, very bullish. Follow-up behavior to the recent breakout. Remember, we had one little whipsaw, and they're approaching that first target there right now. That's an unofficial trade, about 14.19. So you might want to, if your thing is to take profits there, step in early. It's not very big in percentage gains, but with commodities, because they're less volatile. I always use beta adjusted position sizing. Whether it's an official trade, I always give you the suggested beta adjusted position size. That means on a very volatile instrument or a leverage instrument, you take your position down much smaller, and then on a low beta position, something with not a lot of volatility, you can use a little higher position size. But like I said, I'm seeing constructive charts that may indicate more upside. Nice swing trade that may last weeks, months, maybe even a trend trade that's going to last a lot longer than that. So I'm eyeing these targets up here, at least this 1474 in the downtrend line on soybeans, and if and when we get there, depending on what I see, possibly more. Let's see, corn's moving up a little bit today. Nothing big, but 1.24%. And then the generic ETFs, if you want a one size fits all, DBA, moving up again. So that's all. Nothing big right now, but I'm seeing, at least in those select commodities, some follow up. I've been highlighting sugar recently. It's taken a breather today, but not much, down a little bit. The breakout's still very much intact on cane and SGG. Is the other one there? If I can find it here on my watch list. Yep, there it is. And that's really at resistance. That's our former first target right here that was hit on that last trade right away. So resistance there. If it can power on through there, it should work its way up here to that next target around 40.50 or so. And to wrap the video up, we'll just look at the futures for those of you that trade the commodity futures instead of the ETNs. And you should also, I think, keep an eye on these. These are, of the two, this chart is more important than a WEAT, which I just showed you, the ETN. These are wheat futures, symbol is ZW, and you can see it's at resistance right now. Very fairly well-defined level right there. Numerous reactions. That's pretty much that price target of 526.179. Solid break above that level should take us up here, and the chart looks good. Again, we're coming off this divergent low. We're stair-stepping higher in what is shaping up to be a near-term uptrend right now. And again, those are your potential upside targets. Corn is symbol ZC for the futures, and same thing. It's moving. It's in an uptrend, not a very impulsive or powerful uptrend. But you can see there's a price channel there. It's been working its way up for last month or so here, and needs to take out this about 330 level. It's pretty decent resistance. If so, that should open the door to these targets. Otherwise, we're gonna maybe continue to work our way up within this channel. And let's see, which other one did I? Yeah, ZS, soybeans. There it is. This is just a nice clean chart. You can see here, nice, well-defined downtrend line. We never made a divergent low. Still could if this breakout fails. Put in a divergent low later. But either way, it turned out to be more of a triangle pattern. But the uptrend line is the more significant of the two, and we broke out and took out this resistance level today, and so that one still looks good as well. The other things I want to loop back. I already talked about gold and silver. Let's talk about treasury bonds. We're continuing to see more downside. I highlighted these breakdowns the other day. Said I'm not too keen on trading them because the Fed controls this market, or they have a heavy hand in it right now. A lot of price discovery's kind of been thrown out the door, but it is interesting to note we're starting to see we're seeing follow through selling to the breakdowns there, the recent breakdowns, and that's ZN, by the way. I should have said that's the 10-year Treasury futures, intermediate term Treasury bonds, or what we call notes. And ZB is the long bond, about the 25-year range, just shy of the 30-year bond, and that broke down from that multi-month trading range. Ever since really the meltdown and big drop into the March lows, trading normalized. Bonds went sideways. I guess nobody wanted to commit, let the Fed do what they're going to do with the bond market, but they've broken down. So that's worth noting. What does it say? Well, I mean, there's a lot going on right now fundamentally with, now the ECB trying to join the race to the bottom, print, buy more bonds, more quantitative easing, and all this stuff, trying to join the ranks of the Fed, catching up with the Fed at least. But what it would mean on face value is that's showing institutions are selling treasury bonds, and maybe they're expecting the market to continue, the stock market rally to continue. Again, in a normal world, you would take that as that, bonds falling. If the risk-off assets, such as treasury bonds here, are going down, gold's going down. Gold hasn't broken down yet. Gold is, like I just showed you, in a similar sideways trading range. It hasn't yet broken down. But if you see more of this and you see gold break down, then that is a likely sign that institutions are not concerned about protecting themselves with these risk-off assets, and individuals, and they might run the stock market up higher from here. And but we'll see. I just wanted to point these breakdowns out. I'm going to watch them. Maybe this proves to be a whipsaw. I showed you on TLT the other day, if you don't have the futures, where you can watch ZB. This is what it looks like. The big level here was 162.57. You can see again after that all that crazy trading back in March and the March lows, this is where we kind of stabilized, and TLT was holding that support level and broke it the other day, and steady selling since then. Again, so it's certainly technically based. Maybe there was some fundamental catalyst as well, but the fundamentals are the technicals were pretty clear. And we also took out that trend line right here. You have an uptrend line. So that's it. To wrap it up, near-term outlook for treasuries remains bearish right now because of these breakdowns. Take them for what they're worth at least. Gold and silver are still set up for potential corrections even more. We've already had a decent drop in silver, but gold is at support. Silver is actually at support as well, and more importantly, or as importantly, the U.S. dollar is still in a downtrend. It's come close to breaking out, but hasn't done it yet, and the euro breaking down. So those are the things I'm watching. Select commodities again continue to exhibit bullish behavior, and a lot of those still offer objective entries. But ideally, you want to enter strategically. You don't buy, a rally into resistance. You wait for a breakout above that resistance level or a pullback to support during an uptrend. All right, we're going to wrap it up here. I'll get this out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.